Welcome to the 101 Expert Talk for Mein-Geld TV. I warmly welcome Mr. Tönnies. He's fund manager and founder of Antecedo Asset Management. Hello, Mr. Tönnies.
Hello, Mrs. Hägewald.
Okay, Mr. Tönnies. Today we want to talk about the Independent Investment Fund. Could you please describe the investment strategy of Antecedo Independent Investment Fund?
Yes, Independent Invest is an old fund, and he has received a lot of prizes, Lipper Awards, or one prize in Great Britain as the best volatility arbitrage fund.
Okay.
And that is nearly to that what the fund do. He is creating arbitrage between option prices. That means an option with a shorter maturity has a higher price for the time period than an option with a longer period.
Okay.
So, for example, by normal volatility, a 1 month option lose around 2% of their price only over the time. A longer term option, 1 year or more, only 0.5%. So that means a shorter term option has a much stronger falling prices but only over the time. And that is what we do in this fund. We are selling options with relative high time values, short-term options, and buying against this options with longer maturities. And that's with longer maturities in a higher amount, so that I have no risks of short positions who are not closed. And that brings you a time value each month and a participation, because you have bought more options than you sold, on the market. We do this on equity markets, indices, Eurostoxx 50 or Nasdaq 100. And you have, because you buy long-term options in a higher number than you sell short-term options, you are always long volatility.
So we have another question. What is the advantage of the fund compared to its peer group?
That's a good question. What is the peer group of this fund? Because it's in the middle between absolute return and hedge fund and volatility funds. The idea behind this is to create return over the time from the differences in option prices. But you have sensitivities positive to the market too, and you have you can have returns from the volatility. So against this peer group, this calculated return on the one hand, and the chances of market movements or rising volatility are that what makes this fund unique against each fund I know.
Okay, so you cannot compare it actually.
In this asset class, all strategies are very specific. You have here primarily a management approach and not only a market which the fund follows. The combination of this makes it to a volatility fund. And if you see the performance in the last 5 years or all the prizes you have won, it's clear that this fund is on the top of its class.
Okay. So what risk do investors face when investing into independent investment funds?
Yeah, the main risk comes from the strategy itself, and it comes from this long volatility positioning. Because I have bought so much long-term options, and the option can fall if the volatility price can fall if the volatility goes down. And that we have seen in the past, last year 2023 or 3 years ago 2021, in both years the volatility falls, and so we have only returns in 2023 of 0.7%, and the other year nearly 3% in a year. That is for that what this fund can do, not so much. We have no negative year in the last years, but that is the returns in years, if the volatility comes massively down, are lower than it is normal.
Okay.
On the other hand, you have the chance, if the volatility rises, like in the Corona crisis, 2020,
Yeah.
then you can have extremely strong performances, over 50% in a year.
Over 50%.
In a normal year, we calculated only from this time factor a return between 6 and 10%.
Okay, so it sounds really good. How do investors benefit from implementing the fund in their portfolios?
There are different ways. Some investors we have buy it because they have this absolute return idea, who want to have attractive return over mid or longer term period. And the independent makes since 2018 more than 100% in the upside. That's more than the equity market did. Other investors are interested on his specific behavior, his movements against the volatility, because the fund has the best returns if the volatility goes up and the worst returns if the volatility goes down. But that is quite different to classic assets, because the volatility goes up if the equity market is falling. And a lot of investors use this fund from the diversification idea, to have some asset in their portfolio will have really attractive returns if there are other classic investments have problems.
Mr. Tönnies, the last question. What type of investors does the fund target?
Today, primarily institutional investors, because the strategy of this fund is complex. That's the price for that, what is possible here.
For the performance, yeah.
Yes, but it's not too easy to understand for persons who have not a stronger experience in derivatives. The investors we found in this fund are investors with a longer period, who want to have a high, relative stable return, and to have this chance to have a really good asset in their portfolio if you have trouble in the markets.
Fine. Thank you very much, Mr. Tönnies.
Thank you very much, Mrs. Hägewald.